we are awaiting event here, and it's coming up to a key event, a key time frame. Are we going to stay within this, or are we going to break out? So there's a bit of a big narrative. And then on top of that, I'm going to add, Elijah, the last week of August into the first week of September is often a very directional week for precious metals. The 2nd of September was the day. I actually had a thread post at when did we break out, and there was a specific day when it started its move. Again, a squeeze like this, and you'd not have been able to hold above 1,000. You did put a technical 1,030 there, you were resisted there, you were resisted there, you were resisted there. And we have never seen 1,000 again, even in the bear markets.
Francis Hunt, a renowned technical analyst and originator of the Hunt Volatility Funnel, HVF, believes something interesting is on the horizon for precious metals like gold and silver, both in the short and long term. In the short term, Hunt is looking forward to price movements during the window between ending of August and early September. He explains that this window has often been very directional for precious metals, and it was in this same period several years ago that gold finally smashed the $1,000 resistance level after trying 3 times prior. Hunt believes a similar thing might occur this time, with gold finally breaking and holding well above $2,000. The technical analyst believes this could occur in only a matter of weeks, taking the leading precious metals to a new all-time high and on the path of smashing $3,000 per ounce. However, Hunt is also forecasting a brief rocky period for precious metals, a period where everyone finally catches on that the United States economy is already in a deep recession and possibly heading for a depression. Despite the official stance that 2 quarters of negative GDP growth recorded last year is not a recession, Hunt maintains that there are in fact lots of signs that the U.S. economy is in decline and headed for a very nasty hard landing. During a recent interview with Liberty and Finance, Hunt gives 3 important charts to back up his claim. The first shows the tax receipts of state and local governments in the United States. The chart shows a steep decline, as deep as what happened during the Great Financial Crisis in 2008. And while that was the deepest drop during the Great Financial Crisis, there's no way to tell how deeper the decline could be in 2023. Another chart shows the difference between corporate bond yields versus the Fed funds rate, which is currently in an even worse state than during the Great Financial Crisis. According to Hunt, this is an obvious sign that the not a recession official narrative is wrong, and this is actually a mega recession. With all these clear warning signs, Hunt says it's important to be properly invested in precious metals. He adds that gold and silver prices might drop briefly once the crisis is full on, but they will quickly recover as investors seek safe havens during the all-out chaos. We will now bring you clips from Hunt's interview with Liberty and Finance. Please watch, share, and like this video. Also, ensure you subscribe to the channel, turn on post notifications, and don't forget to drop your comments and observations in the comments section below. Thanks, and enjoy the video.
The medicine we'll see that they will bring, we'll see an excellent reaction out of precious metals. However, some of the prelude into that can actually be disinflationary on valuation. So if we were to have a demand-destroying event, the initial problem for everybody is they run for cash. They need money to pay rent, they need money to do everything. And everything that has some element of liquidity to it that can be bought or sold gets sold. So initially you could have a dip in that. We haven't looked at the charts yet. I want to highlight that it might be worth transitioning, taking your question and just building a little further on it by pointing to the gold-silver ratio. The gold-silver ratio is my favorite indicator for when we are ready to move forward on the downside of the gold-silver ratio, which is bullish for the silver and gold. And what you can see right now, got a lot of draws on here and a lot of alerts. You can see I really treat it as a tripwire event, but this is where we are. And currently, actually, we've had a run up in the gold-silver ratio, which has been the fall of silver from the 25s into the upper 22s, which is, it's shed close on $2.5+ dollars, and also gold coming down to round about the 1930s. So it's slipped off quite a bit. What happens next? We had a very seminal moment, because you'll know from our multiple visits that we suspect, and I'll go up to a slightly bigger time frame on this indicator, the weekly time frame. our primary scenario is that at some point soon, you will break this level over here to the downside with the gold-silver ratio. So in essence, you have this structure. There is a D-Day coming for this. And at the moment, you're moving up. It's a question of how far up. If we were to break this capping line and have a strong move over here, our bull market for metals is going to get pushed out if we were to do anything like that. However, if in the not too distant future we stopped climbing and we started waning a little bit and showing some decay on the gold-silver ratio and started to come back down hard like that, our primary setup would still hold quite a lot of store. So this is, as I say, quite a seminal moment. This basing ascending grind line, as we call it, is something we expect to fall to the downside to bring us to the 65s levels, which is part of that right shoulder, massive blow off head. We reiterate again, 2020 was the peak bonds and was also peak gold-silver ratio, the most undervalued silver and low valuation for gold that you get out of this ratio. We had 128 there, and we have a left shoulder just to my left there. So we are awaiting event here, and it's coming up to a key event, a key time frame. Are we going to stay within this, or are we going to break out? So there's a bit of a big narrative. And then on top of that, I'm going to add, Elijah, the last week of August into the first week of September is often a very directional week for precious metals. The back to desk September, the first Monday of September, we called the breakout of $1,000 in 2009 on gold. That was some time ago and I need the gold chart for that. So let me just say goodbye to gold silver. And we had knocked up against 1,000 many, many times. And people had become very much like they are now towards precious metals. You know, oh, you need a patience of a monk, and you sit around waiting for something to happen, and nothing happens for years. It was pretty much this period over here. And the 2nd of September was the day. I actually had a thread post at when did we break out, and there was a specific day when it started its move. Again, a squeeze like this, and you'd not have been able to hold above 1,000. You did put a technical 1,030 there, you were resisted there, you were resisted there, you were resisted there. And we have never seen 1,000 again, even in the bear markets.
We are again in that window during which we wait and nothing happens for an extended period, especially for silver. But Hunt believes everything is about to change, and it could be as soon as ending of August/early September. According to the popular technical analyst, gold prices will begin a strong move up soon, and as soon as it moves past the current all-time high and holds for a few days, there would be a massive bull run towards $3,000. When this happens, silver would have an even stronger run, being the more volatile metal. Hunt also suggests important things to do to prepare for the coming macro upheavals.
And we ran all the way to the footstep of the next millennial in gold, 1900s and 16. So when you let go of a key 1,000 level, you let go of it big. And the argument I make to you is that it's a very similar juxtaposition that we have today in this. So I'm actually biasing that the gold-silver ratio will actually pivot at some point not too far off, but I can be wrong, because we have a very similar type situation with the 2,000 value. There is no holding on the big time frames. I'm on a monthly up top here for a sustained period yet. But the pullback here has been far more mixed than the crash. Don't forget, this was Powell and 4 0.75 interest rates hikes back to back, when he absolutely rushed the rates. And you'll be aware that the prospect of a very steep rising rate cycle is generally not initially very good, especially if it's coming in more aggressively than expected for the gold price. And that put a bid under the dollar quite extensively. So we're unlikely to get that kind of behavior again. If anything, we're going to see more and more evidence of the economy slowing. So this downside will not be as deep, and we may well be becoming ready for a September assertion. And once we break the 2,000, much as we had for the 1,000, my argument is going to be that you don't see 2,000 again. It will serve as support. You might immediately technically just test it and run below it, but once you've had some degree of time, that forms as a cyclical support low, and we could run to the next 1,000, which is 2,900. Our technical targets have taken us to the doorstep of 3K. So initially silver, kind of weak, but prone to being far more schizophrenic. It can go from being really weak to, if gold starts to put in good days and good bases and starts truly building, to being rather strong. And I'll highlight probably the most important silver chart time frame is actually a very big time frame one, Elijah, and that's I'm going to literally, every candle here is a 6-month candle. So 2 candles represents a single year. And I'll highlight, taking us all the way back to the Volcker years, that the 45 to 50 price range, so that goes back to, Hunt Brothers, etc., Volcker, etc. This was the resistance that you got, 45, 50 gateway. In 2011, we made that level again. And we are out of this continuation structure. When it turns, we are projecting that you will get brought to this range again when this breaks to the upside. So if gold starts putting in some good days, gets above 2,000, holds 2,000 and starts building on it, silver's response will be to go to the $45, $50 range once gold has shown that it is clearly sustainable in that range. Eliminate all personal debt, especially that which has a variable rate. At the same time, accumulate so that you also have some saving. It doesn't always feel good to only pay off debt. Certainly accumulate long-term your local currencies coins. So I think for Americans, get your Eagles, and I would say the Britannias for the British, etc., and maybe Kangaroos for your Australian audience, etc. So locally, start getting your drip feeding your bullion in, but eliminate debt. I'm actually positioned short on debt by choice. So there is an ETF, which called TLT, that you can short, that is long-term debt. So there's just too much of it. It has to be deflated away. More and more people are realizing, I feel, like the conclusion we came to in 2020, August, where we said that was peak debt. This is the end of a 40-year bull. More people are starting to make that seminal. I get much less resistance now to the fact that I'm actually calling a top on a major market after 40 years of inflation. Everybody goes, ooh, I'd never do that, bonds will be back. Nowadays, there's far more acceptance of that fact, but the book isn't showing that. It truly needs to go down.
Hunt is predicting a hard landing for the United States economy, which would briefly impact precious metals prices as people struggle to find some liquidity. But as the situation becomes more dire, more investors will seek shelter in precious metals, which have always held up impressively during periods of economic decline. Do you agree with Hunt that metals prices are really about to take off? Please share your thoughts, comments, and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos. Thanks for watching our videos.